because we did on Wednesday a question that was very similar, where we had to walk through a list of transactions and then classify the list of transactions according to their statement of cash flow category of operating, investing, or financing. This specific question says, what is Kohl's net cash flow from operating activities? So we need to pull out the operating activities. But I will tell you, there are 3 versions of this question. Another one can ask about investing activities, and another one can ask about financing, and so you may as well just classify them all, okay? Starts out by saying, Kohl Company began operations on January 1st, 2011, and during 2011, the company engaged in the following cash transactions. So this question is kind of nice in that every transaction listed, already involves cash, so you don't have to determine for this version of the question, was it a cash transaction or was it not? On the exam, you can expect to find the harder version where I list transactions and some of those transactions don't involve cash. So you have to do 2 assessments, determine does it involve cash or not, and then classify the cash transaction. But in this question, they're all cash, so we just need to classify each one of these as operating, investing, or financing. So when we issue stock, what are we doing? What kind of activity is that? Financing. Issuing stock, because we are issuing the stock to our investors. We know that financing activities are dealing with our investors or creditors. Borrowing money from the bank. Financing. That's the other side of the financing, where we are dealing with our creditors. Selling merchandise for $28,000. Operating, because who are we dealing with? Customers. And when we're dealing with our customers, it's going to be operating. Most of the time. It's a pretty good rule to follow. We paid back $10,000 of the bank loan. It's still financing, because at one point I've said, when you originally classify a transaction, there are very likely going to be follow-up transactions, and those follow-up transactions will maintain that same classification. So when you borrow money from the bank and it's financing, when you turn around and pay back that amount that you borrowed, the principal, that's still a financing transaction. It's just now an outflow instead of an inflow. So each of these categories will have inflows and outflows, but once you classify a transaction one way, all the rest of those transactions related to that are going to stick with that original classification. That is a general rule. We will break that rule later, but it's a good rule to follow for now. Okay. Then paid rent expense. Operating, because you heard what word? Expense. Expenses and revenues, transactions related to expenses and revenues, those are operating. Purchased equipment costing $5,000. Investing, because it was a purchase of a long-term asset, so that is an investing activity. Paid $3,000 dividend to stockholders. Financing, because who are we paying? Our stockholders, who are investors. We're dealing with our investors, therefore it is a financing activity. Not to be confused with the investing activity from the previous one, because when we are talking about investing activities for statement of cash flows, that means we are investing in our own business by purchasing or selling long-term assets. Paid employee salaries, $11,000. Operating, because the word that was implied there is that when you're paying those employees or salaries, you're dealing with a salaries expense. Okay? So now all we have to do is go add or net, when we combine the pluses and the minuses, all of our operating activities. I like to start with my pluses and then subtract out my minuses because it's easier on my calculator, so I scan through these quickly and see. When I sell merchandise, I'm getting cash, so that's a positive cash flow there, an inflow. When I'm paying operating expenses, that would be an outflow. And when I pay employee salaries, that would be an outflow. So I put into my calculator the $28,000, then I subtract out $2,000, and then I subtract out $11,000, and I wind up with a net cash flow